Well, you have all of these countries joining the BRICS that you put them all together along with the Shanghai Cooperation Organization and the Belt Road. You're talking north of 80% of human population, and all it would take. Now you have to remember, we're coming from a period of time where asset prices were blown sky high over the last several years, with more money being created in the last 3 than in the history of the country preceding it. A lot of that money found its way into assets, and you have the misallocation and the distortions that are created by this. All it would take would be for Saudi Arabia to stand up on the stage, as they just told the folks at the Davos conference that we're now going to consider taking other currencies for oil. We've already been told that the BRICS currency would be pegged to gold or to commodities, and the assumption being gold being one of the commodities. I think all it would take would be Saudi Arabia to say to the West, thanks for the memories, it's been great, we appreciate it, but we're going to open up oil purchases in other currencies, not just dollars, maybe euros and ruble and rupee and gold, and all of a sudden, bang, all of the countries that have had to hold dollars for the last 50 years no longer really have any interest in holding them. And if they all start to dump dollars, and I think it would happen quickly, where they would all dump dollars, you have a tsunami of inflation hitting the shores of the West that would immediately create a spike in interest rates to compensate for the loss of purchasing power. This is how we see a great reset, as interest rates spike in relation to a crashing dollar, which then is inversely correlated to asset prices that have gone stratospheric over the last few years, and I would argue irrationally. And as interest rates spike and this inverse correlation hits the shores, stocks, bonds, and real estate, along with the crashing dollar, all collapse at the very same time. And when I ask, do you think it was intended? I guess I'm kind of tongue-in-cheek, but if you think about it, now you have a villain. Instead of blaming the Fed for creating these distortions and letting this happen, you have the Fed there saying they're going to raise rates, but they've done a woeful job at raising them high enough to tackle inflation. A lot of people will make the analogy to the euro, that all these countries came together and it didn't work. And I think there's something to be said for that. But when you look at all of these countries coming together in a similar rallying cry, for whatever that rallying cry is against the West, it is the backing of the new system by commodities, and perhaps all of it denoted on a distributed ledger. The digital yuan, which has been running for the last 4 years, backing the Belt Road to the tune of over 20 billion in successful transactions, would be, I believe, the rails to a new BRICS currency that would show the immutability of what every country pegged or pledged to the new system. That gives it the glue to make it work, where everyone has the same equal footing, equal say at the table. This, to me, is what would make the system work. As Zoltan Pozsar calls it, a new system backed by commodities, Bretton Woods 3, rather than a system backed by debt instruments and promises. I think the bottom line is simply this: we are indebted to a level that will never pay it back, and interest rates are rising. So at what point do people want to start receiving something that is tangible for the commodities that they're trading or for the business that they're doing with a country that is paying them in inflated dollars? And certainly the treasury market is rife with risk at this point in a rising interest rate market. I think the bloom is off the rose for the West. So what does it entail? How do they fight back? I'm sure they will, and maybe it is war. I think the Saudis are joining the BRICS nations so that they have protection from countries that have the ability to back them and stand up to the West. I think, certainly the Saudis would be the linchpin of it all. Yeah. But if they're joining a group that has the ability to stand behind them and protect them as part of a unified nation or a unified group, it would seem that they're picking a fight with everybody. I guess all I'm looking at is mathematics. And when you see such a massive shift of human population coalescing against the dollar, and it's very obvious to see when you see shifts away from accepting the dollar for oil by countries already, and admissions by Saudi Arabia to look to other currencies, I think you have to take a real hard look at what happens if all of a sudden the world doesn't need to own dollars to buy oil.
And it's not just oil, because we're seeing a move away from U.S. treasuries globally, well, certainly from China.
Of course. Right? Not just China, Saudi Arabia, all of these countries. Why would anyone buy our treasuries earning 3% with inflation double that by metrics that arguably are wrong? I don't know if you've ever had John Williams with Shadow Stats on your show, but He'll show you numbers that the way the inflation was calculated prior to 1980, when they changed the numbers, and he would say inflation's at 15% right now. But even using 7% inflation with a 3.5% yield on the 10-year Treasury, you're guaranteed a real return of negative 3.5% compounding over 10 years. Why would anyone want to do that? And so you're right, it's not just the dollar market, it is the Treasury market. And we are incentivizing by the underperformance and the mismanagement of the dollar and what's happened to the yields on the treasuries for other people or for these countries to find other ways. Every country on the planet, nearly 85% of all oil sales have been in dollars for, the last 50 years, if not more. All of these countries, it's the foundation of their currencies. And if all of a sudden the dollar starts to tank, it'll be a tsunami of selling, sell, in order to not be crushed by the wave of selling. And I think when that happens, and you have all of the dollars hitting the shores here, you have that inflationary spike in interest rates. It has to compensate for the loss of purchasing power. Interest rates would have to spike. And when I started in this industry, stocks and bonds were inversely correlated to one another. It was called risk on and risk off. And when you realize that they are now positively correlated to one another because interest rates have been driven so low, a spike in interest rates cripples both the bond and the stock market and, of course, the real estate market. The pillars of wealth in the United States center around stocks, bonds, and real estate. If the dollar gets dumped globally, and there's way more dollars outside the US than there are domestically, if all of a sudden they get dumped globally because you don't have to hold them to buy oil anymore, and they hit our shore, spiking interest rates, you see a collapse simultaneously in all three pillars of wealth, including the dollar. I think we're making a very big mistake by making the admission to the Saudis that we want to go green. We're ruining their way of life is the way they're looking at it. So why would they want to do any special favors for us? And this is why they came out and said to Xi Jinping that you are our most important trade partner in oil today and for the next 50 years. That's a big deal because we've been their biggest trade partner for the last 50 years. Why are we seeing the central banks buy more gold than at any time in the last 55 years? The people who are closest to the information and have the most money, they're making an exodus quietly. Why do we see India import 400 million ounces of silver and the mainstream isn't talking about it? These countries not only are, and players, wealthy, family offices, sovereign wealth funds, they're not just accumulating the metal, they're withdrawing it off of the exchanges.
Silver and gold.
Yes, and where it loses a good deal of its industrial liquidity. If you want to have metal as an investment, you leave it in the COMEX warehouses because you have industrial liquidity. Where Elon Musk says, I'll pay $50 premium for every ounce of silver people want to sell. No, this stuff is being shipped outside the exchanges. It's a very big deal. So to your point, just like in 1933 when gold was confiscated, so much of it, the insiders shipped their gold to the safe deposit boxes by steamship of Switzerland before FDR confiscated gold. Maybe these people who are draining the exchanges in a precipitous way for the last 3 years are front-running what is coming. And so most people in this country, 60% of them or so, are living paycheck to paycheck. They can't even write out a check for $5,000. So they'll be happy to be given stimulus and handouts attached to a new central bank digital currency. So I think ultimately it will be one. A lot of the countries—
one universal.
Yes, for the CBDC, but right now they're all creating their own. And the Chinese built something called the M Bridge, as in Mary, M Bridge, which is a cross-border payment system for central bank digital currencies. And they did this with United Arab Emirates and one other company, Singapore, I forgot the third country, but it's irrelevant. The point is that this allows cross-border payments sidestepping the SWIFT system in central bank digital currencies. That's the bridge, if you will, to a common currency, but they are all de-dollarizing. They are all moving away from the dollar as sole settlement. Turkey just created their own. Turkey also imported more gold than any country in the world last year, and they just applied for BRICS. So they're all doing it little by little by little. They asked Ernest Hemingway, I believe, how'd you go broke? Little by little by little, then all at once. And I think that's what's happening.
Slowly, then suddenly.
It's a chess game, and they're moving the pieces, and then they say checkmate, but not until they're all in position.